Welcome to Pie in the Sky Capital, everyone. In this video, I will be discussing order blocks. It's safe to say that order blocks are a big assortment in the Forex industry, and if used well, they can be very, very useful. Many Forex gurus teach about order blocks, but what they don't teach is how to identify strong order blocks. So that is what I have decided to educate you on. After watching this video, you will be equipped with the knowledge that will allow you to identify strong order blocks that hold up and get the job done. So without further ado, let's get to it. The first thing you want to know about order blocks is what time did the order block form. Okay, strong order blocks form an hour before session opens. So if New York opens at 8 a.m. in your time zone and the 7 a.m. candle forms an order block on the hourly time frame or the 30-minute time frame, then it's a strong order block. The same applies for London session and Asian session. Having a look at TradingView, we see that it's on Thursday the 9th of March. We had an order block at 8 a.m. an hour before London open. Okay, this is a strong order block. This is a bullish order block that forms an hour before London open. It is not a coincidence. It is there for a reason. It is clear that market makers had the intention of bullish momentum and movement. If an order block forms during the first hour of a session open, then price goes on to breaking structure by making new lows or new highs, then it is a strong order block. Okay, have a look here. This order block forms during the hour of New York open on Wednesday the 22nd of February. Okay, it trades lower than the previous day's low, so it breaks structure. Okay, price comes back to it, it finds resistance there, and even in the future it was not easy for price to just trade through it. Okay, strong order block. Order blocks that form an hour before session opens and during session opens, the first hour. So when I say the first hour, it also means that you can find an order block within the hourly time frame, looking at the 30-minute time frame and the 50-minute time frame. Point number 2, where it happens. Where does the order block form? Okay, where an order block forms is also important. Order blocks near daily highs and daily lows are very strong, especially in a trending market, because they tend to be in a zone of supply and demand. Look at this bullish order block found at the low of the day. Okay, this is the 1st of March. Okay, we find ourselves a bullish order block that forms 2 a.m. my time zone. Price returns to it the next day, it holds up. It is a strong order block because it is found at the low of the day. Okay, there is demand here. Okay, and vice versa. If we're looking at a bearish scenario, there is supply there. Okay, utilize the Fibonacci tool, and if there is an order block at the 0.6 or at the 0.786 level, it's safe to assume it's a strong order block. All right, okay, I've drawn out my Fibonacci tool. This was on Friday this year, Friday the 3rd of March, right? We find ourselves in order block. On Wednesday and Tuesday, price returns to this order block, it holds up. It is near the 0.786 level. Okay, order blocks below the 0.5 level tend to be strong, because when price is below the 0.5 retracement level, it means that price is at a premium. Okay, premium just means that you get price at a discount if you will be buying or selling in the direction of a trend. Okay, so this is how you utilize the Fibonacci to identify strong order blocks. And here is another example, because I like you so much. Okay, an order block at the 0.7 level. You could look at this one, you could look at that one, but there's definitely an order block when you look at the 4-hour time frame, a solid one. Okay, so this one right here, okay, I will use that because this is the order block from which price made new lows. Okay, it broke structure as well. Look over there, when it traded lower than the previous day's low, it breaks structure. It even trades lower than this day's low. Okay, strong order block. Lastly, order blocks that are situated in zones where price first has to grab liquidity before reaching the order block. Then the order block is very, very, very strong. I find them to be the most formidable. Okay, for this example, we'll be looking at GBP CAD. This is week 12. So we see that on Monday and Tuesday, we get equal lows or something close to that. Okay, what happens on Wednesday? Price trades below these two lows. Always remember that below highs and lows, there's liquidity. Okay, so there's liquidity here. Price trades below that, grabs the liquidity, it trades into an order block. As you can see, here's an order block that is in the direction of the trend, bullish trend. You take a setup here and follow the trend. Point number 3. Did news or fundamentals form an order block? For the sake of explaining this, say for instance today is Tuesday and yesterday after New York opened there was a major news, okay, like CPI, PPI, or maybe Fed power ran his mouth, interest rates, or even job claims. And during that news event, an order block was formed, and from that order block, price made a new high or new lows. Then you best believe that's a strong order block without a shadow of a doubt, because it was made by fundamentals or news. So looking at this for an example, on the 3rd of March, here's an order block that formed at 3 o'clock, 3:30 in my time zone. There was news, PPI, CPI, and after the formation of that order block, it held up. Okay, it made new lows. From this order block, new lows were created, right? In fact, it held up a couple more times. So without a shadow of doubt, when fundamentals or news result in the formation of an order block, be very excited. Okay, see if that order block can be a part of your point of interest. Okay, point number 4, very important, very, very important. Okay, write this down. Where does price go after the formation of the order block? Okay, so here's 2 beautiful examples in one shot. You want to involve yourself with order blocks that break structure, the ones that make new highs or new lows. So, okay, so looking at the example, from this order block, price made new lows, right? Made new lows when it traded past Monday's low. That's a new low, and the same goes for here. This order block made new lows when it traded lower than the previous day's low. Okay, very strong order block, guys. Keep that in mind. This will improve your trading significantly. Order blocks that grab liquidity and introduce momentum are formidable order blocks. Okay, for this example, we'll be looking at Wednesday the 28th, okay, of December. This is the order block in discussion. It trades above the previous day's high. It grabs the liquidity. So after this day, you just know this is a strong order block. What happens? The very next day, price trades into it, rejects it. And on Friday as well, price trades straight into it, finds its way back away from it again. Okay, very strong order block. Focus on order blocks that are in sync with the trend. That means you want to follow a trend from a strong order block that's in a zone of supply or demand. Order blocks that form after breaking weekly structure will almost always act as support and resistance. They are always strong order blocks, and you need to take them into consideration, serious consideration in that fact. Look at this for an example. In this week, we trade lower than the previous week. We break structure. Soon as we break structure, there is an order block that forms, okay? A week later, price returns to this order block and it rejects it twice. Very strong order block. An order block that will form after price breaks weekly structure is very strong and formidable. You can trust it, okay? You don't want order blocks to be your point of interest. You want an order block to be in your point of interest. I recommend you only consider 30 minutes, 1 hour, and 4-hour order blocks. They are most reliable. Don't make order blocks your strategy. I found that to be inconsistent. Instead, make order blocks a part of your strategy, an assortment, something that increases your confluence rate, okay? Something that increases your probability of winning a trade, okay? It can't just be order blocks. I promise you, if you put this into your trading, if you execute this into your trading and implement it, it will change your perspective of order blocks, and this will improve your trading a lot. Until next time, please don't forget to like and subscribe if you feel like your time was well spent. Kindly also check me out on socials at pieinthesky.strategy. If you want to learn more about special diversions and how to utilize the dollar index to increase your probability of executing a winning trade, you can check out my course, link in the description below. In the course, I teach everything about my strategy. It's the only strategy I use, and I leave no stone unturned. Full transparency, and you'll definitely learn something. You can also check out my psychology course, where I teach advanced trading rules that fix the psychological challenges that traders come across. And if you're in search for a trusted broker, check out the broker I use for my personal accounts. Link in the description below. They're regulated, no hassles, super low spreads, 0 swaps, 0% commissions, instant withdrawals, and you can even withdraw on the weekends. Until next time, guys, always remember, the pie in the sky is profit at first bite.